Hello traders, Gary Wagner here. It is 11:06 in Honolulu, 5:06 in New York on Monday, 8th day of August 2022, and this is the daily report for gold and silver. Both gold and silver had very respectable gains today. The dollar was down fractionally. First to gold, basis the December contract. Gold is currently fixed at $1,805.50. That is an increase of 0.80% or $14.30. But it was silver that was most dynamic, gaining over 4%, 4.17% to be exact. Currently, September silver is at $20.67 after factoring an 83-cent gain today. And then lastly, the dollar was down fractionally, down 0.19%, with the dollar index currently fixed at 106.285. Recently, it has been dollar strength that has been the largest force driving gold lower. Of course, gold did hit a bottom last month and then began to rise. At the same time, we can see that the dollar hit an apex at about 109.15, and in the last 2.5 weeks, we have seen it trade down to our first level of support, 105.087, before firming up a little bit, currently at 106.28. I do expect the dollar to show more weakness throughout the week. The points that we want to look at, of course, is 105.08, as well as the 50-day moving average. That is currently fixed just above that at 105.258, which means that for the most part, this most recent rise over the last week has been predicated on bullish market sentiment as traders bid the precious yellow metal higher, and dollar strength or weakness played very, very slightly into that equation. As we talked about in our opening letter, we've broken through the first level of what we've called minor resistance at 1800. The next level that we want to look for if gold continues to rise is $1,831. That is the 61.8% fib retracement. And as I said, I believe that the brass ring is going to be to trade above $1,880. The reason for that is we've had consistently lower lows. First, 1890, 1766, and the low in July of 1678. Now we want to see if we can have a high that is above the most recent high that came in at 1880. In other words, if we have a lower low and then have another lower high, that firmly tells us that on a technical basis, we're still in a bearish market. The one good thing that we can say is that we are trading above the 50-day moving average, and that is the first thing that you want to see as a market pivots from bearish to bullish, and it has broken through the first level of minor resistance at $1,800 per ounce. That being said, all eyes will be upon Wednesday's Consumer Price Index report. If you recall, last month it was reported that the CPI index hit a 41-year high in June of 9.1%. Currently, both major polls, Bloomberg's poll of economists and the Wall Street Journal's poll, are looking for a slight downtick in the CPI, either 8.7 or 8.8. Those are the estimates by those two publications. If it comes in far below that, meaning 8.5 or 8.4, we could see gold trade under tremendous pressure. If it comes in at 8.8 or higher, we could see a major uptick in gold. As I said, we will have to see what happens on Wednesday. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.